And here are the crypto top headlines. First up, VanEck predicts a 10,600% Solana price rally by 2030. Next, Hester Peirce speaks out against LBRY enforcement action. The market could have decided. Also, Uphold to buy XRP on open market promises not to use customer funds for ODL Ripple payments. Welcome to Crypto Top Headlines, where there's no clickbait thumbnails or titles and no speeches on my opinions, just bringing crypto's news to you. We are a new channel here on YouTube and would greatly appreciate it if you would click on the like and subscribe buttons as well as the notification bell. It does help support the channel, so thank you in advance for doing so. Now, on to these headlines. Our first top headline, VanEck predicts a 10,600% Solana price rally by 2030. The report also delves into a potential scenario where Solana becomes the first blockchain to accommodate applications with over 100 million users. Layer 1 blockchain and Ethereum competitor Solana has seen its native SOL token surge above $32 this week as asset management company VanEck anticipates further price gains and shares its price forecasts. In a report, VanEck outlined diverse valuation scenarios for Solana's price to range from a conservative $9.81 to an ambitious $3,211.28 by 2030. In comparison, Ethereum's price target is $11,800. This would mark a 10,600% price surge for Solana in the coming years. The report also delves into a potential scenario where Solana becomes the first blockchain to accommodate applications with over 100 million users. Furthermore, the report illustrates Solana's potential to narrow the distance between itself and Ethereum in the future. VanEck has been engaged in the cryptocurrency arena for a while, having submitted Bitcoin exchange-traded fund applications to the United States Securities and Exchange Commission in recent years. Solana has emerged as a top 10 cryptocurrency with impressive growth exceeding 200% since the start of 2023. The total value locked in Solana ecosystem is $378 million. However, there might be potential for a partial pullback in the price of Solana. The Daily Directional Movement Index, or DMI, indicates an increasing hold by bears on the daily chart, requiring strong action from the bulls to safeguard the gains amassed since the crypto market aligned with Bitcoin's rise to $35,000 in recent days. If the bulls fail to gain the upper hand, it could lead to a drop below the $30 mark. Traders considering short positions for Solana may consider selling. This is influenced by technical indicators where the blue line is decreasing and the red line is increasing, which are signals of a potential price decline. This pattern indicates a heightened bearish impact and the possibility of a market downturn, which could result in a 15% decrease in Solana's price from its current valuation of $32. This aligns with a nearby support level bolstered by the 21-day exponential moving average. Our next top headline, Hester Peirce speaks out against LBRY enforcement action. The market could have decided. The SEC commissioner said the regulator's actions forced a group of entrepreneurs to abandon what they built, with LBRY announcing in October it planned to wind down operations. Hester Peirce of the United States Securities and Exchange Commission has issued a dissenting opinion on the regulator's lawsuit against blockchain firm LBRY. In an October 27th statement, Peirce described feeling unsettled following the SEC's enforcement action against LBRY in March 2021. In November 2022, a judge ruled in favor of the SEC, stating that the firm's LBC token was a security. Though LBRY appealed the decision, the company announced in October that it planned to wind down, citing millions of dollars in debt due to legal costs. This case illustrates the arbitrariness and real-life consequences of the Commission's misguided enforcement-driven approach to crypto, said Peirce. According to Peirce, the SEC's case against LBRY was puzzling, given there was no evidence of fraud and the firm took a conservative approach to digital assets compared to other crypto projects. The SEC commissioner suggested that there had been no clear path for a project like LBRY to come in and register with the regulator, and it would not be a particularly useful effort if it had managed to do so. The Commission took an extremely hardline approach in this case, said Peirce. For example, after winning on summary judgment, the Commission sought monetary remedies of $44 million and asserted that LBRY's offer to burn all tokens in its possession was not sufficient assurance that LBRY would not violate the registration provisions in the future. The Commission's requested remedies were entirely out of proportion to any harm. She added, "The time and resources we expended on this case could have been devoted to building a workable regulatory framework that companies like LBRY could have followed. Then the market could have decided LBRY's fate." The Commission's action forced a group of entrepreneurs to abandon what they built, said Peirce. Our disproportionate reaction in this case will dissuade people from experimenting with blockchain technology. Peirce has often been a dissenting voice at the SEC in crypto-related enforcement cases. In September, she told Cointelegraph that crypto firms shouldn't give up on trying to launch in the United States, but added she believed the Commission was far behind in finding a solution for a regulatory framework. Gary Gensler, who chairs the SEC, has often called on crypto firms to come in and talk to the regulator to avoid potential enforcement actions. To date, the regulator has filed lawsuits against crypto exchanges, Binance and Coinbase, and many other firms in the space. Our next top headline, Uphold to buy XRP on open market promises not to use customer funds for ODL Ripple payments. U.S.-based trading platform Uphold disclosed plans to purchase XRP on the open market for its ODL, now Ripple payments, transactions, with a promise to not leverage customer deposits. Uphold disclosed this in a recent reply to a customer's inquiry following their partnership with Ripple. Recall that Uphold and Ripple inked a strategic partnership, as recently reported by the Crypto Basic. Significance of the Ripple partnership. The partnership would see Ripple leverage Uphold's trading platform for its Ripple payments, formerly on-demand liquidity, or ODL, offering in the United States. Ripple had desisted from offering Ripple payments in the U.S. due to regulatory concerns. For the uninitiated, ODL is a payment solution that uses XRP to enable real-time cross-border transfers. It works by converting one currency into XRP, sending XRP across borders, and then converting it back into the destination currency, all within seconds. David Schwartz, in a previous comment, noted that the San Francisco-based company does not provide ODL services with a U.S. nexus. However, he disclosed that they could toe that path without any legal repercussions, supposing the XRP does not come directly from them. Uphold to buy XRP from the open market. Interestingly, the partnership with Uphold would see the firm achieve this goal. However, much like how ODL operates, Uphold would need to purchase XRP to use it as a bridge currency for ODL transactions. To gain insight into how Uphold plans to secure these XRP tokens, an Uphold customer and a Texas-based XRP community figure asked the trading platform if customers' XRP deposits would work to provide liquidity for ODL transactions. In response, Uphold confirmed that it would not be leveraging customers' deposits. It bears mentioning that XRP makes up Uphold's largest crypto holding, amounting to $1.25 billion worth of the token in customer funds. For context, customers only hold $168 million worth of Bitcoin on Uphold. Despite its substantial XRP holding, the platform plans to purchase XRP on the open market for ODL transactions. We will, however, be using our expertise in sourcing both fiat and crypto, XRP included, on the open market in order to facilitate the near instantaneous transfer of money across borders via Ripple ODL, a representative said on X. This approach provides a much-needed relief considering the risks associated with commingling customer deposits with company funds. The FTX implosion of last November stemmed from an unchecked misappropriation of customer funds, especially for uncapped loans to Alameda Research. Since the FTX collapse, centralized exchanges such as Uphold have been mandated to make public their proof of reserves. Uphold's recent decision to not touch customer deposits demonstrates its resolve to not misappropriate funds on its platform. So this concludes our top headlines. If you haven't already done so, don't forget to click on the like and subscribe buttons, as well as the notification bell. Also, leave your thoughts in the comments and share this video with your friends and family. Thank you all for watching Crypto Top Headlines, bringing crypto's news to you.